So this evening, Kelly will be talking about financing requirements for a business. She'll talk about sources of financing. We'll kind of talk about business collateral and personal collateral as well. She will spend a lot of time focused on the financial statement projections and the cash flow, income statement, and balance sheet. I will also wrap the session up talking about our loan application process for any of you that need financing. And I'll kind of talk on grants and what is required for those as well. Next week, we will have, I'm sorry, there's a correction to this. It's not Chelsea Cooper from Great Lakes Law, but we do have Sarah Craig from Great Lakes Law talking about the legal requirements for startups. Another one, just like an accountant or a bookkeeper, a lawyer is a very key player in your core team. And then we're going to talk about wrapping up that business plan with your cover page, your table of contents, executive summaries, and appendices. We are also going to have that insurance presentation, hopefully. I have somebody on the line that could possibly do a presentation. So I'm hoping they will present that even, next week as well. Kelly, next slide, please. And this is where my friend Kelly Hill will take over, and she's brilliant and bright, not just beautiful. And I'm very gracious, and you guys are so lucky you have her talking to you about this stuff and not me. Kelly, I'll pass the reins on to you.
So here I am. I am Kelly Hill. I am a longtime friend and colleague of Jen's. Just to give you a little background about myself, I have been in the accounting field probably for over 25 years now. Hard to believe, I know, but it's always been a passion of mine. I've been at the college for 22 years. For about 18 years of that, I worked in the finance department and sort of retired from my career there as director of financial planning to try something new and jumped over to faculty. So I've been teaching our accounting youth for the last 4 years. And just last year, a couple months ago, last year, this time, I started my own business, actually, Blue Water Virtual Business Solutions, where we provide back-end solutions to small businesses and entrepreneurs, not just in bookkeeping, but in other aspects of, what they may need on the back end to get their passion and goals out there. So when I often attend some of these to, learn some new things myself. And when Jen asked me to speak, I said, sure. I probably even a little bit better at this year, having gone through my first official year in business. So I can give you a few tips and tricks. So one of the things I do want to start off with, which is just as a disclaimer, is not a sales pitch. Just be wary when you're going to have someone look after your books. Anybody out there can be a bookkeeper, but not everybody knows what they're doing as a bookkeeper. You don't necessarily need credentials to do that. And there are a lot of bookkeepers out there that simply decide that's the task they're going to take up today, which doesn't necessarily lend itself to having a small tax bill when it comes to tax time and giving your books over to an accountant should they have a lot of additional work to do. So just be wary of that. But I do recommend that you start off early with someone looking after your books. I started last year, like I said, around 2 months ago this time, and my books were the last to be done. So when it came to tax time and when it came to getting myself ready, I had a lot of catch up to do, which I can do. But it is very important, but it's more important to look at it throughout the year and not just at tax time. So that's what we're going to talk about today. I do tend to talk a bit fast, so if I get going too fast, feel free to stop, put your hand up, or just unmute. We're not formal here. Some concepts are a little easier to grasp. Some get a little too accounting-y, and I'll kind of glaze over those. But if you have deeper questions, let me know. So anyways, it just says here that a survey conducted revealed that 24% to 45% of Canadian small businesses do not understand basic financial measurement in their business. And I can vouch for that after a year in business myself. And the people that, I've sort of encountered that have focused on their goals and their dreams and their passions, which is your purpose, right? But maybe not thinking about what's going on in the back end. And as it says, failure to understand your financials in your business could prevent you from moving forward. Oh, wait, am I in the wrong one? Which one am I? No, I'm good. Again, how to make it through COVID, right? I hated COVID teaching. All right, so proper record keeping. So it's for very many reasons. It's not just so that you can have nice, pretty books to present to your accounting at year end. Okay, it allows you to make decisions faster. It allows you to see what cash flow you have coming in your business to see if you can, pay out your expenses that are coming forward. As you grow in your business, you're going to have more and more government requirements that you need to satisfy. The big C.R.A, they don't go away. It's for, getting loans at the bank, getting loans and grants, such as one you may apply for through the SLBDC. And as we all know, with COVID and what happened there, it can help you prepare for times that aren't so economically feasible for you. All right, so today we're going to talk about accounting information and why, as an entrepreneur, it's important to you, right? It's also important to those that may invest in your company. You guys are all starting out new businesses. Some of you may need a lot of capital and some of you may not. And getting that capital may require some investment from outside sources or lenders such as banks, right? Or loans, as I said, from the SLBDC or somewhere else. The government needs your accounting information and then any other outside advisors that you might have. But it's also good for figuring out how much you can spend on certain expenses in your business. Oops. So we're going to talk about a number of things today. We're not just going to talk about accounting and bookkeeping and what keeping good records means, but we're going to talk about what kind of bank accounts you want to set up, what kind of payment methods you want to use, what's a good way to track your expenses, what do you even need to track, financial reporting and the 3 key financial statements that are important in your business, taxes, taxes, when and how to register your business, what kind of business do you want to be? So there are a lot of things involved in accounting for small businesses beyond simply having a nice record of what you spend and what you bring in. Lots of things to consider. The more consideration you give these things on the front end, a lot easier it will be as you go along and coming out the other side. So one of the first things that you're likely going to want to consider when you're starting your business, and I'm sure that Jen and her team have already probably touched on this and talked about it, but I'm just going to bring it back up again because typically this is the type of thing that you might talk about both with a lawyer, a business consultant, and your accountant, right? Do you want to be a sole proprietorship? Do you want to be the only person that owns your business, have less legal requirements maybe than a corporation does, and just treat it as part of your income on your tax return? So as a sole proprietor, there is unlimited liability, which means you're responsible for all the debts of the business. No matter what happens in your business, they can come after personal assets. They can, this of course isn't always something you need to worry about when you're operating a small business, but recognizing that a lot of you might be starting a brick and mortar business, you may have a lot of creditors, a lot of lenders. This is something to consider. A partnership, maybe you're in business with a friend or somebody you've met who's going to be your colleague. Partnerships and sole proprietorships run roughly the same. There's unlimited liability on both partners or all 3 partners or the number of partners that you have. And both the owners or all the owners are taxed on their profits. So that basically means that what your business makes in profit goes on your income tax return. Okay. Corporation, on the other hand, gives you limited liability, which means if your business fails, your corporation, closes its books, pays off its assets, and they can't come after your personal assets. It's a separate legal entity for tax purposes. So this one's important. So for example, I set myself up as a corporation because I already had another job, right? So I wanted to be able to have profits for my business, stay in my business, and the business get taxed on those profits so that they weren't simply, now that of course was when I started making profits, which doesn't happen in the beginning more often than not. But nonetheless, I had high hopes, right? So we want those to stay in the business and I don't want to take those on my tax return on top of my income. So something to consider depending on the size of your business, depending on what you're going to do with your business, depending on who you're in business with. Of course, with corporations, you can have multiple shareholders, or you can just have one. So you can certainly be a sole proprietor that incorporates. Okay, so that would move you from sole proprietorship to incorporation, but with only one owner. Any questions about that, Jen? I'm not too sure how much you guys have spoken about it. No? Good.
We talked a little bit about it, and we covered that. We just didn't do like an accounting focus like you did.
Okay. Yeah, there's a number of other reasons, certainly. I don't want to say here that these are the only two reasons, but these are sort of the accounting type reasons that you want to think about when you're trying to determine which way to go with your business. Now, many
Yeah.
small business.
Sorry, Kelly, sorry to interrupt. In general, rule of thumb is to look at your other small businesses in the similar industry. How are they registering their business? How is your competition registering? If they are doing that, then you should too. And now I'm out. I'm not interrupting you anymore, I promise.
I expect you to. It's okay. That is true. Now, the one thing is you can go from being a sole proprietorship or a partnership to incorporating, but you can't go the other way. Okay, so you can start off as a sole proprietorship, and when you get to a certain level, if you feel at that time you should incorporate, you can. So really, to be honest, it's just when you want all of the paperwork, because it does come with a lot of paperwork, and because all of you are going to be wildly successful, it's probably inevitable that you incorporate. So, but it can come at a later date. So this is probably one of the worst accounting topics to cover for my students, for my friends, for my business associates, but I'm going to talk about it anyways, okay? Because there is a difference in how you account for your accounting in your books. One is cash basis and one is accrual basis. And if you're not familiar with accrual basis, it's not the easiest thing to get familiar with. However, what it means is, am I going to operate my books based on when cash is coming in the door or going out the door? Or am I going to track my income and expenses as I earn them? Okay, so typically most organizations that are incorporated, well, all organizations that are incorporated and others will do an accrual-based type accounting, because that gives us a very true picture of when you're earning your revenue and when you're spending on your expenses. So it gives you an accurate picture of what your gross profit is and your net income is on a monthly basis or on a quarterly basis or on an annual basis. So I always recommend to set your books up that way. If you're not engaging the services of a bookkeeper and accountant, you really could keep it simple and just simply have your ins and outs happen as they go. So you do have those two options when you first start out. You just need to be cognizant that if you're using the accrual based, that may mean that you don't have the same cash as you do recorded income, right? Because we all have those clients and customers that may not pay right at time of sale, or it may be that you have expenses that you have bills for that you haven't paid for yet. So that's what it means when we're talking about the difference between cash accounting and accrual-based accounting. So I always recommend choose a system. I know there's a few of you out there, I'm sure, that are Excel whizzes, and I would think that if you're at this point, you're probably not going to be able to operate your business out of Excel for very long. And there are so many accounting softwares. I'm getting ahead of myself because I'm so passionate about software. So many pieces of accounting software on the market that you don't have to do this by yourself. You don't have to whip up 8 Excel spreadsheets that all talk to one another. So we'll get there in a second. But you can have a DIY, like I said, a little do-it-yourself, a little spreadsheet, a little Google Sheets. Of course, you could hire someone. Typically, as a startup or as an entrepreneur running a small business, you're not going to get to that point for quite some time, if ever. Payroll doesn't have to be cumbersome anymore, even if you have, several employees. Oftentimes, again, as a new startup business, you'll maybe contract out employees versus I think this is something that your lawyer speaks about next week too. So hot topic for next week, whoever is speaking to you. You can outsource your payroll to a third party. But like I said, typically you're going to run pretty small in the beginning, and either a do-it-yourself type of bookkeeping is going to do it, or a little bit of outsourcing with a piece of software would do it. So manual systems, like I said, these are, I had to look these up, to be honest with you. I've never personally heard of One Book, One Write multi-journal systems. I'm not sure that, again, you would even want to bother looking something up like that when there are systems out there for small entrepreneurial businesses that need very minimal accounting. So you could outsource your financial activities. What outsourcing means is, actually, I guess that's what I do. Really think of myself that way, but you don't need a full-time bookkeeper, and very few businesses do for a very long time. So hiring someone in-house isn't something that you need to do. You can just outsource it. You can, get a bookkeeper, or you can get an accounting firm to just look after your books. One thing I would caution is, depending on who you outsource to, They may or may not be completed in a timely fashion like you need it to be. So think about that wisely before you do it. And then, of course, there's small business computer systems that many business owners are adept at learning and running themselves without getting the help of an ongoing bookkeeper, whether outsourced or in-house. So there's many options for you to get your accounting right from the get-go. So the accounting software I'm talking about, I'm sure that by now, most of you on the line have probably heard about, 2 or 3 or 4, or maybe all of these. QuickBooks is one of my favorites. I'm not going to lie. I find it versatile, easy to use, user-friendly for those that maybe aren't so accounting adept. Sage Accounting is a good piece of software. I teach that actually at the college, and I sort of find that to be a little more accounting focused for those that know how to navigate their way around accounting on the back end. FreshBooks Wave, both of those are good for small proprietors. Xero is much the same as QuickBooks, and I'm not familiar with NetSuite, but it's coming up pretty quickly on QuickBooks heels. And then, of course, Microsoft Office being the Office suite. So none of these need to cost you more than $20, $30 a month if you're just starting out. So it's not a high cost, but it is a cost that many of the business owners that I run into tried to avoid. And that really does end up with you getting a costly bill at tax time. So just think about that. You don't want to be that business with a box of receipts and yes, that still happens. I've got a big box of receipts this tax time, even from one of my clients, and I don't do taxes. So you want to make sure that you got your own keeping track of your own receipts. Again, as I mentioned, not just for tax time throughout the year, but definitely to get ready for that time of year. All right, let's go back to what happens when you start your business and opening a business bank account. Super important. I can't tell you how many of my clients come to me with their personal and their business cards mixed. It's not unusual at all as a small business, new entrepreneur starting out. Sometimes people can't get a business bank card or a business credit card, and so they continue to use and get financing from their own personal cards. Makes it difficult when tax time comes around and the government frowns upon it. You're opening yourself up to possibly getting, audited the bigger you get. So, it's fine for starting out, but as quickly as you possibly can, even if it's just the bank account that you get. It is a legal requirement if you're a corporation. However, you can't operate with your personal bank account. It just simplifies everything. And of course, makes you look a little more professional. It does streamline the loan process, and it's really just the right thing to do for your business practice, right? Keep them both separate. I know that a lot of people starting out can't get that business credit card because you need to establish some collateral first. If that's the case, perhaps maybe you have 2 personal credit cards and you can make one of those personal credit cards be used for your business and one be used for personal. So at least you're separating out your personal and business expenses, because of course you cannot have personal expenses in your business books, also frowned upon by the government. Contrary to popular belief, the government does not pay for your dry cleaning. One of the most popular questions I get, I don't know why, because I don't think I've ever gone to the dry cleaners, but you know what I'm saying. All right, what else do we have here? Payment methods. So there are lots of different payment methods in this day and age. A lot of smaller businesses start out with just e-transfer, right? Typically getting an e-transfer in is free. It doesn't cost you anything. And then as you go from there, it could start costing you money, right? Unless you're a brick and mortar. Well, no, actually even debit card costs money. So you can get payment through your accounting software. So there's a ton of different accounting softwares that will actually accept payments right through them. QuickBooks does, Sage does. Well, I think pretty much they all do. Sometimes you need to have third parties like Stripe or maybe PayPal, depending on what kind of currencies you're using. You could have mobile payments. So there's so many payment methods that you can choose to accept. Just make sure that you're looking at what kind of fees you're going to be paying in the beginning. Because of course, credit cards, the payments through PayPal, through, I'm not too sure about Stripe actually. Yeah, Stripe, and all the accounting software, they all charge around a 2.9% fee. They're all roughly the same. And you want to be cognizant too, if you're having third-party softwares, keep in mind what it is that you are going to be using for your accounting technology or software, because the better the integration, the less work for you or your bookkeeper. And then choose your payment methods that you're going to use. So like I said, debit card, credit cards, are you going to have a line of credit that you're going to use to pay your bills? Are you going to use e-transfer? Careful of your bank account, depending on where you bank or choose to have your business bank. Some of them charge per e-transfer, unless you have the right package set up for your business. So choose the payment methods that you want to accept, and choose the payment methods that you want to use as a customer yourself. How we doing? Okay. Talking a little fast. That's what I do. All right. So then we're going to talk about tracking expenses for your business. Okay. The most important thing that I always say is your bank and your credit card statements are what are going to tell the story about your business. So every time we bring on a new client that we're going back in time for, we're either catching them up for a couple months, sometimes a whole year, sometimes a couple of weeks. Either way, the bank statement tells the story for us. So that's why everything that you do should happen through a bank account and a credit card that are specific to your business, because that's how we know what's happened in your business. So make sure you have good bank statements and credit card statements, receipts, right? If you ever get audited, you want to make sure that you have your bills and your receipts for any expenses that you've had to pay, any utilities, or whatever it is that you're paying for your business. A lot of the software nowadays will allow you to actually just scan it or send it right to the accounting software and attach it to the expense rate in the system. I don't use all of the softwares out there because and I don't sell QuickBooks, so this isn't a sales pitch. I just use it because it's simple, but right in there, we can store our receipts. We can make sure that the taxes match in there, and you can simply invite your accountant at the end of the season, which I'm sure you can with most of these softwares. I know FreshBooks does it as well. Wave does it. So you invite your accountant at the end of the year right into your system, and they get to see all of your paperwork right there, which, God help us, if you ever get audited, will also work the same way, but that's not going to happen in this. And then, of course, make sure that you have your financial statements and your tax returns for each period. Financial statements shouldn't just be a year-end thing. We're going to talk about that in a little bit, but they can help you throughout the year as well. So make sure that you're running and looking at them often. All of this can be kept electronically. We're in that world now where there's lots of places we can keep them. If it's not right within the software, it can be on a Google Drive or somewhere on your computer. It all in one spot makes it a lot easier for you and for those that are working with your books. So make use of online storage solutions. Make use of a receipt scanner. Again, those pieces of software are likely going to have apps with them where you can simply scan your receipt right in and upload it. If not, the notes function on your phone actually works well as well. Jen.
We've got a question from Josephine. What happens if the cooperation did mix personal and business? I think it meant corporation.
Happens all the time, my friend. You just want to make sure that you get them separated out before tax time. You're not going to jail. I know a lot of my you're not going to jail. And they're very forgiving in the beginning, but as you get deeper and deeper into business, particularly if you're incorporated, it's not something you want to be doing. But as long as you're actually separating them out by the time, tax time comes around and you're not trying to claim your personal expenses and your business taxes, then it's fine. It's just highly recommended not to do it. And it is frowned upon should you get found out, so to speak, but you're not going to jail. It's okay. All right. So have a good filing system, keep everything where you know where it is. Key here is knowing what an allowable business expense is and what isn't. For example, meals and entertainment, contrary to popular belief, are only 50% deductible. You're not actually allowed to just, have lunch out every day with your clients and deduct the whole bill. There's new HST for meals and entertainment now. Oftentimes I joke about the dry cleaning, but a lot of my clients think that they can claim clothes and you can't claim your clothes, you know, that type of thing. So review and look at your business expenses regularly, make sure that they're real, make sure that they belong in your business. And, you know, there's lists of these. I should actually change this PowerPoint up to add in a list of expenses that are allowable for businesses. And please remind me,
with
what's that?
Clothing, PPE is a write-off, isn't it?
Sorry, yes, I'm simply talking about if you dress up in a business suit for work and you're wearing, you know, a tie and you want to claim that. But yes, anything that is required as a uniform, and no, your suit is not a uniform, but yes, PP&E is safety boots, safety hat, safety jacket. Even if you have to purchase an actual uniform, or if you're providing actual uniforms for your staff, it's personal clothing of any other nature. Anything you might wear to the club, you know what I'm saying? You're not going to trot in there with your business or with your big old boots. So let's think about it that way. All right, good questions. So I have two things I don't want to forget to talk about. One is allowable business expenses at the end, and home office expenses. Because Jen, I'm not sure I've included that in this, but we've just done a big, I'll actually share that with your group. So let's talk financial reporting first. This is where half the time in the beginning of my classes at school for my non-accounting students where their eyes roll back in their head, but this is going to be very important to you. So the balance sheet, okay, that's our statement of financial position. So this tells us what your business owns, and it tells us what your business owes, and it tells us what equity you have in your business. Okay, we'll talk about each of these as we flip the pages here. Income statement, statement of profit and loss. That's every business owner's favorite financial statement, whether good or bad, because it's telling you how you're doing. It's telling you the results of your operations for a defined period of time, right? Revenues minus expenses gives you your profit or loss. We all want that not to have brackets on it or be red at the end of the day. I can tell you right now, it's probably not going to happen for the first few months or a year or two. Cash flow statement. What cash is coming in your business, what cash is going out of your business. So as I said earlier, when I talked about cash accounting versus accrual-based accounting, your profit and loss statement does not necessarily equal your cash in and out. So there is a bit of a difference between these two statements, and we do need to see both of them for different reasons. So let's look at a very simple balance sheet here. So the way I always explain this to my students is think of it as your personal self, okay? You have those things that you own. So you have a house, you have a car, you have clothes, not that we're going to put that in our business. You have people that owe you money, whatever. You have things that you own, and then you have things that you owe. So you've got your mortgage on your house, let's say. You've got your car loan on your car, that's your asset. You have credit cards and so forth. So the difference between those two is your equity. So if we simplify that down and we talk about a house purchase, if we purchased, now I used to say when I was teaching, you know, back in the day, 4 years ago, I would say a house purchase of $200,000 or $300,000. Now I got to bump that up to $800,000, right? Because we're not buying a $200,000 house anymore. So let's say we're buying an $800,000 house and we're getting a $500,000 mortgage. The difference between those two is your equity in the house. So that's the very same for your business. Take what you own, less what you owe. That's the equity that you have invested in your business. And I always say, if you close your doors today, that's what you'd take out of it. Okay. So you can see here that it says common stock, common shares. You know, that applies to a corporation if you incorporate. And, you know, it sounds big and fancy, but I'm incorporated and I have, you know, like 10 shares, I think it is. So it's just something that's figuratively speaking, unless you're going to grow and get more shareholders. If you weren't incorporated, that would just simply say capital. So owner's capital. Okay. And then we get to the income statement. That's the fun one. That's the one we want to see often and a lot, because our balance sheet is at a point in time. Okay, so our house doesn't go away on December 31st, right? Unfortunately, our debt doesn't magically disappear on December 31st. So everything that you see on the balance sheet is simply at a point in time. So picture it like looking at your bank statement on March 31st, right? Odds are good that on April 1st, it's probably not going to be the same. So it's, you know, ever evolving. It doesn't go away. So unlike the balance sheet, your income statement is for a period of time only. So all of our revenues and expenses get closed out at the end of our year. And when we look at our income statement, we look at it for a period of time. It can be any period of time you so choose. Also, another reason why having a robust piece of accounting software is not robust, any piece of accounting software is good for you. It allows you to have those glances more often, right? What did I make in the first week of this month versus the first week of last month? What did I make in this month versus this month last year? Lots of comparators that you can do if you've got your accounting software in motion. So it tells us our sales less our cost of goods sold, gives us our gross profit, minus our selling expenses. If I'm right, everybody on here is selling something like a product or right, not just a service. Is that right, Jen? Do we have service-based businesses on here?
Yes.
I'm a service-based business.
Oh, okay, thank you. So I'll talk about both then.
Now, Josephine's going to be doing a little of both, retail and service.
Awesome. Okay. So
and Emma as well. Sorry.
That's okay. You know, I did look at the list of businesses and then I have, you know, not a very good memory. So I apologize for that. Okay. So when we're talking income statement, look at this little piece here. And I always point with my pointer that you guys can't see. Cost of goods sold. Okay. This can apply to both a service and a product-based business. But it does always apply to a product-based business. Okay, so what does it cost you to get that product ready for sale? And that allows you to see your sales minus your cost of goods sold, gives you this nifty little number here, gross profit, right? That's what your business makes before it pays out all of those other operating expenses. So my favorite analogy for this is making a muffin, right? So if I'm going to make a chocolate chip muffin, my favorite. I'm going to buy, you know, $2 worth of ingredients, food prices. I used to say 75 cents, $2 worth of ingredients, right? And I'm going to sell that muffin for $3.50. Okay. So without labor right there, my gross profit on that muffin would be $1.50. Right. And then we have some other operating expenses we have to take off of that. So maybe it's Kelly, maybe it's, you know, the rent, or maybe it's the stove, or the whatever we have to pay off top of that. So gross profit tells you what you make off your sales of product alone before you pay all of the other general and admin and selling expenses that your company has. So it becomes a very important number in a lot of the financial ratios that we're not actually going to get into today, but that are used quite often when you're in a startup business. Now, I work in the service industry, so I don't sell products, I sell services, but I make use of this section as well. So for my service-based businesses on the line, I have a lot of subcontractors, and so I call those my cost of goods sold, right? Or if I have to have particular pieces of software to use for particular businesses, that becomes a cost of goods sold for me. So the way I look at it is I wouldn't have that cost if I wasn't making that revenue specifically to that client. So or to that product or to that service, okay? My rent, if I have no clients come in the door in the month of April, I'm paying that rent, right? If I have, you know, utilities, my equipment, any of that kind of stuff, all of those expenses are going to exist whether or not you sell anything, sell any products. So whatever your cost of getting that product to the door and out the door, that's what's going to go in this cost of goods sold section. Does that make sense? Does anybody have any questions about that piece? Okay, Jen, I was actually surprised my cat wasn't in here for the
I'll give Cleo time. The night's still young.
Oh no, I shut the door. She has a habit now of just sitting beside me and looking at me while I'm on camera now. It doesn't faze me, but it throws people off. So I kicked her out. All right. And this statement here is probably the most often forgotten, not used. And it's honestly for a little bit larger business. It should be for everyone, but it's mostly used for larger businesses when we want to track, you know, how much accounts receivable do we have out there? How many payables do we have that we owe? When are we going to have cash coming in? When are we going to have cash going out? It's a little bit more of a cumbersome statement. And oftentimes you may only see this part of the statement, right? Just what's going in and out in a month compared to what you're logging as a profit and loss. So the cash flow statement just gives you an idea of when you can expect to have money and when you can expect you're going to have to find money. So it's a good indication in the beginning. I don't do it. I should do it. I just kind of keep my eye on the prize, make sure there's money in the bank to pay things. not a good way to go. So that's just because I'm flying by the seat of my pants doing everyone else's books. But, you know, if you don't have that accounting eye on it like I do, I just inherently know, you know, in my head what a cash flow statement's going to look like for me this month. But not everybody does know that. And these are very important. I know it's lame, isn't it, Josie? Yeah, not very fun on Saturday night. All right. So cash flow statement versus income statement, two very different statements. All right, so why do we need these? Well, first of all, one of the things I didn't put on there is a budget because it's not actually a statement, but flipping back here to your income statement, this baby should also be in the form of a budget, not just your actuals. I worked in financial planning for 18 years, so budgeting is my passion because I believe you have a good budget, you have good spending habits, right? How many times have you guys okay, is anybody lame like me and tracks their own income and expenses in your house on, oh, I love you, on Excel? Yeah, I'm moving mine over to Mint, which is like a kind of a personal version of QuickBooks, but yes. So I find that if I'm tracking my income and expenses in my little Excel spreadsheet every week, and I'm matching my budget, right, then I can save right away. Husband stopped shopping because he loves to grocery shop a lot. And we have a grocery budget, right? However, when I'm not looking at my spreadsheet and seeing my bank transactions go through there, he's at Walmart every other day, right? So if you have a budget in your business, it's much the same as monitoring your personal finances, right? You're going to spend to it and try to achieve the revenue goal, you know, if you know that you're further away from it. Okay, so budgeting. So why do we want to budget? Well, we need to be able to budget for a number of reasons. I'm pretty sure there's going to be a robust budget required in this process for you guys, for the SLBDC team. Yeah, they're probably going to want you, I can't remember what it is now, but is it 5 years out, Jen, or is it 1 year?
1 year out.
1 year out. Okay, well, that's better than a 5-year one. Yeah, so they want to see what's going on, right? I didn't do that for myself because, again, my business sort of took off a little bit faster than I was anticipating, which, yes, is good news, but also leads to lots of spending. So careful of that. So I didn't get to that part until just recently. And when I did some, you know, a look back at my financials, I had some of those. Actually, I'm going to pause and I'm going to say, I didn't look really at my financials. Intuitively, I just knew what was coming in, what was going out, and that was fine, but I never really looked at it. And what I missed by not looking at it was also celebrating my very good months that I didn't know that I had. I had just assumed that all of my revenue was spread out and it was fine and great, but there were some really good months, and that really revved me up to kind of achieve those months every month and get past those. So you don't just miss the bad things that are happening, you miss the good things that are happening too, right? So I will say that too about playing catch up if you don't have good financials. So I forget where I was going with that. Where was I going with that, Jen? Moving on. Okay, so budgets. You want to make sure that you have a budget, and you also want to make sure that you're adjusting your budget when need be, right? You want to make sure that you're not spending things that you don't really need to spend money on. Maybe you want to hire a couple of people and you don't know if you're going to be able to. So how much is it going to take for you to hire that person, right? We get tired as entrepreneurs. We are really tired as entrepreneurs, right? We put in way more hours. I always say I work for free, or I work to pay my team. But you want to make sure you're not doing that. I'm going to pause for a moment. I'm going to tell you guys that one of the best books I've ever read, I didn't read early enough in my entrepreneurial career. And if you haven't read it yet, Profit First. I don't know if you've heard of that book. Profit First is an excellent book, and I think that every entrepreneur needs to read that now. Like, if you guys are already entrepreneurs, so you need to read that today. And what that book does is, and I'm not selling that either, and I didn't. Wish I did, but that book tells you that you don't work for free, and you need to plan so that you don't work for free. So guess who read the book and didn't do what the book told me to? This girl. That's what I do. I read books, and then it takes me 3 months to realize I should have probably done what they told me to do. So it tells you, and I'm not going to going to spoil the surprise for you because I truly believe you need to read it. But it tells you that you need to make sure that you're not using every dollar that comes into your business and spending it. Okay. You got to pay yourself. You've got to pay the government. You've got to have that emergency fund, right? So it talks about the 5 kinds of bank accounts you should have right from the get-go. And as I said, I didn't do that. And then when it came time to pay my HST, I was like, oh, I guess I got to go find that. Right? So think about that. I seriously think even if you just rent it from the library or get it on your audiobook, it's an excellent book and every entrepreneur should read that. Add that to your plan, Jen. Bossy me. All right, profit first, because you don't work for free, right? You will for a long time, but you don't want to always work for free. So make sure you have a budget, make sure you're spending within your limits. It talks about, it talks a little bit bigger here about short-term financial planning in a larger environment, but you need to do that as well, right? You have to identify, when am I having, for me, when did I get to the point where I had 18 pieces of software that I was paying for, right? Because it's like, it's really easy to click on that 3-month offer that says, oh yeah, I'm gonna get that for 75% off. And then all of a sudden I'm starting to pay full price and I don't really pay attention, right? Because it's just happened. And then I need this new piece of software. So I did a little bit of a software audit on myself because that's my main cost in my business is people and software. But for you, keep an eye on what your products are that you're purchasing for your cost of goods sold. Where are you finding your subcontractors or your help? So make sure you're identifying discrepancies and or variances in your business by keeping, comparative analysis. So that's short term, right? That's what's happening in your business in the short term. So budgeting is good for the short term, especially if you're a seasonal type business. So trying to think of the businesses on here. If you're a seasonal type business and you're just gonna, wow the universe in summertime, then that summertime money is going to have to carry you through for the rest of the year. You're going to have a little bit different kind of budgeting than, maybe a service-based business that operates year-round does. For me, we offer 3-month packages. And one of the things I didn't do was, and we have a weird payment plan where they pay half up front and then, half and then half again. So some months are big for me and then some months are a little bit smaller depending on how I've got my clients spread out. So you'll get to see if you're keeping good financials, what that cash flow in looks like, and therefore what can that cash flow out look like. And then of course, we think long-term because we're all, like I said at the beginning, going to be wildly successful. So we have to think about what happens when we do get wildly successful and we want to have a bigger building or go into a brick and mortar. If you're not starting off there, I think most of you are, but, or you grow and you need, I'm going to use my friend, Josie's friend as well. So Great Lakes Refill, they started as a booth in the downtown market, right? And they grew into a big store on Christina Street. So, you need to be able to plan for your expansion and your growth if you want to, continue to do so. So that's capital investment, right? So that's, how much can we invest and when? The capacity decision, that's your break even. Okay, we don't work for free, friends. So we want to make sure that we're at least breaking even on what it is we're doing in our business. So of course, we know break even means we didn't lose anything, but we didn't win anything. And then, like I said, the expansion decision. So lots of reasons that you have long-term financial planning, but perhaps right in there is the capacity decision. Another one of the things that happened to me being service-based is I grew so fast that I wasn't quite ready to grow that fast. And so I personally wasn't able to give the level of service maybe that I would have and wanted to. Had I have done some of this, planning and moved some of my timelines out, it would have looked a little bit differently financially, and it would have looked a little bit differently in the way we ran. Instead of flying by the seat of our pants, we're well ready to do so. And that's the same in any business. So I just got a little chart here. I keep using my pointer that you can't see. Just a little bit of a chart here that shows you kind of where all these points intersect. And of course, fixed and variable costs are on here because those fixed costs are those things that you're going to have no matter what. So no matter what, you're going to have your accounting software subscription now, right? You're going to have, if you have rent, your rent is going to be fixed. Maybe your utilities, They are usually known as a fixed cost, but of course they can vary, but you're going to have them every month. And the variable cost is that spending that you do over and above that, right? Where your extra money goes, which inevitably it has a place to go, always. Okay, I know this is your favorite part. It's everybody's favorite part. Income tax, sales tax, and payroll taxes. The government likes your money, okay? It's thankful for you that you're running a business in Ontario, so it's going to take your money. So income tax, we're all familiar with that one, right? As a business, you pay income tax. As I said earlier in the presentation, if you're a sole proprietor or a partner in a partnership, you take your portion of that profit. If you're a partner, the whole profit, if you're a sole proprietor, and you get to, or you claim that on your income tax. Now, I'm not going to get too much into taxes because that would really make your eyes roll back at this time of night, but you are allowed to have a loss and carry forward that loss and use it again against future income. So if you cheap out, as I say, on bookkeeping, that's fine. Do not cheap out at year end when it comes to finding the right accountant. Okay, you can go to places I won't name that have people there that just were trained yesterday and might do your taxes for you. But I can tell you that going to the right tax person could make all the difference in the world and how your taxes are filed as a small business owner. Okay. I always say that both my sister and I are accountants, and I was always in financial planning and at the college in education. And she was a tax accountant for 10 years. She did my taxes forever till she gave me the boot finally. But she did them forever because I had a rental property. I had, things that I just wasn't up on the tax laws for, and she knew all the ins and outs for me. So you want to go to an accountant that knows about small business ownership and knows what you can deduct and what you can claim and what you can do with your loss from last year, this year. So friends, if you take nothing else away from this, take away that you really should head to a qualified, competent accountant at income tax time. In fact, I am an accountant and a CPA, and I don't do taxes for my clients. I get them tax ready, but I know that that accountant on the other end will do them more of a service than I would without a lot of education and training, which I'm over at this point in my life. So go to a good one. Anyways, I'm off my soapbox now. So yes, you were required to pay income tax for both federal and provincial, just like you are as an individual. And then let's talk sales tax. There is no more complicated thing in small business, I don't think, than understanding HST. So HST for you just starting out, you're lucky enough that it isn't going to matter to you at first in most cases. You do not need to register for your HST number if you don't want to until you have business revenue over 4 consecutive quarters, or pardon me, business revenue that reaches 30,000 in 4 consecutive quarters. So it's not 1 calendar year, it's 4 consecutive quarters. And then there's some lots of ins and outs on that as well. So, if you reach your threshold in September, let's say, you don't need to begin charging until the end of the following month. So if we reach our threshold September 18th, we start charging November 1st. Okay, so the best thing to do is when you're reaching that, like when you're at the $20,000 mark, $25,000 mark, just call and register and get ready, or even just call and ask questions. There's an HST number, a hotline number that you can call that the government of Canada has people sitting there waiting to talk to you, and they're really, really, really helpful. But you don't want to miss this. Okay, missing your registration for your HST costs you money because you have to go back and pay the HST on those sales that you had, and you're not allowed to go back and charge your customers. So you don't want to miss out on that. Now, if you opt to register for your HST right away, sometimes that's easier. If you're product-based business, maybe you can start charging HST right away, which means that you then get to claim your ITCs right away, your input tax credits. So that's the HST you get back on your expenses. So again, another reason why accounting software is important, because most accounting softwares, or all, should have these HST rules embedded within them. right? They should give you different types of tax codes to use. So you want to make sure, first of all, you're not losing any money on those expenses that you pay. But you also want to make sure that you're recovering that HST from your clients. So sometimes that means that you have to go and let them know that if they're a regular monthly client, like service-based clients are, you have lots of time. So when it happened to me, in my world, guys, as an accountant, meeting the HST threshold is a success. I know most people don't understand that because nobody wants to pay HST or deal with the government, but that's a big threshold in small business, right? When you hit your HST number, man, like you've made $30,000, right? So it's a good and bad thing, but make sure that you know the ins and outs of registering and get ahead of it, not catching up behind it. And that's just it. What's that?
Sorry to interrupt, Kelly. We've got some questions, and we've recently had clients that have had their accounts all locked out because their remittances have not been up to date multiple times in the recent, or they had a tax bill that they the accountant didn't effectively do properly, and they have a significant amount owing to CRA now, and they're not forgiving when they need their money. To the questions. Jennifer was saying I had a separate account for HST. Great idea, because then you can pay into that. Christine's asking, is there a negative to starting to charge HST as soon as we open?
No. I wish I had done it personally. I didn't. I wish I had of, because I spent a lot and I had a lot of ITCs that I couldn't bring in, even when I wasn't making any money. So if you register right away and you're not making a ton of money, you can still claim your ITCs and get that money back. You cannot claim ITCs unless you're registered. So that is a plus if you think you're going to have more upfront expenses. So no, there really isn't a negative. Sometimes for us in the service industry, when we want to keep our, I'm in the virtual world, right? It's the new world. If we want to keep our costs down and be competitive, sometimes that's just not something we want to deal with, or if we're using the States, but really, I wish I had have done it myself and just got it over with in the very beginning, but I certainly didn't see my business going. It was supposed to be a little side business of fun. So it went there faster than I had intended it to. So had I had known that or planned for that, then I probably would have registered earlier. So no, Christine, I don't think you can go wrong. I don't know. What's your business, Christine?
She is
with dog grooming. So the personalized dog care and for high stress anxiety dogs, and just dogs and their people who kind of need a little more time. But
Kelly's got a dog.
Yeah. I'm like, are you open already?
No, I am grooming full-time in Sarnia right now. So I've kept a very quiet profile on this part of my life for the next week or so. Yeah, so it's been a year-long test market, or just over. But yeah, so I'm mostly going to be service. It'll be like 95% service, 5% will be, the goal is some local artisans products, things that appeal to dogs, but keeping it locally based. So, yeah.
Sure. Okay. One thing, if you could let Jen know when you're ready to take an anxiety dog that needs grooming, I'm in. Okay.
I do that now.
Like,
so we'll chat offline about that.
All right. We will talk then, because my dog needs some help. Okay. Aside from that, yeah, the only thing is you charge it on everything. Right. So you charge it on, yeah. So you charge it on everything. So in your case, I don't know that you would need to do that, because if you're gonna, have a lot of services with not a lot of ITCs, it might just be a hassle and raise your prices for your customers. So that's really a personal decision. For those businesses that have a lot of upfront expenses, I totally would just go for it. But Christine, I don't know. You might have to weigh your pros and cons on that one. Yeah. Because it could give you a little bit of a reprieve too, right? So, because then it does come with paperwork. So to Jen's point, 100% right. Most of the people that come to me because they are in HST trouble. And we got to get them quickly into an accounting system so that we can get a handle on their HST. So if you opt to go without a good system, I'm sorry, you can have your own good system, but an accounting system, at least make sure that once you hit this point, that you're getting something in the records, because otherwise, and like QuickBooks, for example, they just fire a HST for you. Like and I'm sure that I only say QuickBooks, I don't use the other ones, but I'm sure most of them do. So there's lots of, for the $20 a month, most of my clients pay for QuickBooks. They get a lot of stuff done for them, right? So yeah, just make sure that you are paying on time. And even if you don't know 100% what it is, you don't want to be owing, because that is when you can get in trouble with, operations, get in trouble moving forward, get in trouble, with your lending and that sort of thing. And that brings me to payroll taxes, because they're particularly sticky on payroll taxes. Okay, so income tax is your once a year. HST, actually, you can file, you can opt to file quarterly, monthly, quarterly, or annually, depending on the size of your business. So even if you register, you don't have to file monthly until you're in a bigger bracket. So you can opt to file, and most do, annually. Not me, right? Because I was dumb and said, oh yeah, quarterly sounds good. Yeah, take the longest one out that you can. Payroll taxes. So as soon as you hire someone on payroll, you have to pay some money. So they pay their CPP and their EI. You match their CPP and you pay 1.4 times their EI. So something to consider when you're thinking about hiring on payroll. As I said, I think next week, I'm pretty sure, did Lisa talk about it? Did you have Lisa from HR? Yeah, did she talk about contractors versus employees?
Not really, no.
Okay, so last year it was Chelsea, so I'm assuming your lawyer might talk about it next week then.
I am. Yes, we do address it next week with the differences in the Supreme Court tests that are used to distinguish the two.
Yeah.
You don't pay for a contractor, they cover themselves. And if they're an employee, you got to pay for them. And what the distinguishing line is, there is a legal line. Yes, we will be covering it next week.
Yeah, and I'm not, so I won't get on that, but it is a big deal, because a lot of people think that they could just hire people as contractors and not be responsible for payroll taxes. Not the case. There's a lot of questions that need to be asked. There isn't a definitive line, but there is a set of rules that really help you to determine that. Again, if you're brick and mortar, you're hard pressed to be able to say someone's a contractor if they're working in your business setting. It's when you're contracting out a service. So lots of things to think about there. But as soon as you have an employee on payroll, there's payroll taxes. Depending what kind of business you're running, you may have WSIB or employer health tax. So it could come at a cost, but nonetheless, they are due the 15th of the month after the April 15th for March 31st, and there is no give on that one. Yeah, you get hefty fines if you don't pay your payroll taxes and your HST for that matter. So, okay. Oh, thank God I need some water. I'll turn it over to my friend here. Actually, I do have one more thing I want to talk about, Jen. Did I take
We're talking about allowable expenses and at-home expenses.
Do you want me to do that after you're done?
Sure, we could do that. I can address our financials, because I think you want to see one of these parts that I'm showing as well tonight.
Okay, then you know what I'll do is I'll get my fancy spreadsheet I'm going to share with your team up for free.
Okay, awesome.
Okay.
You are amazing. So as you may all know or may not know, we also provide financing as well. We are probably more apt to grant Sarnia-Lambton small business financing before a commercial bank would in some particular areas. So we do have that opportunity for financing as well. We want a business loan application to apply for it. You will need a business plan for this, and I'm going to speak on this business plan a little bit. We have a formal template, as you may all know, that will be a part of that package. Also, along with that, the pro forma statements. Now, if it is an existing business, the existing business will need to have financial statements, accountant issued financial statements from the previous business owner, usually anywhere from 3 to 5 years before. Along with that, we'll have financial projections. That's obviously a part of your business plan, but you will see 1 year out of what your pro forma trends will be from a income statement perspective and from a cash flow statement perspective. And part of the reason why we want a business plan as well is we want to make sure you know what you're doing with your finances and that you're reasonable with your expenses and that you've covered all the parameters that you potentially will need financials for. Along with that application comes a personal financial statement. If you are married, there will be a spouse that would be a part of that, and any client testimonials that you might have. There might be also other documents requested, like agreements or contracts that might be out there that will be sorted on a case-by-case basis. We do grant up to $300,000 in financing to new or existing businesses. We have had some recently come through for expanding as well. Our rates range from prime plus 2.5%, and we are open for partial or full repayment at any time with no penalty. A certain percentage of your application will be required for the application with $150 application fee. And we will work together with other lenders such as banks and credit unions in order to get the financing. Part of your business plan will have 2 components for the financials section outside of just the pro forma statements. It will be basically your financial requirements. Along with that, what financial backing that you're bringing to the table as well. Now, grants. It's usually the first question that I get from a lot of people. Sorry, Kelly, I'm going to be kicking you off because I'm sharing my screen. So we'll have you share after again, okay? But I want to show everybody this amazing website. Can everyone see this okay? It's called the Business Benefits Finder. So here's the website here that you can go to. Now you can find it elsewhere as well. You can go to this, this site as well, but oops, that's not what I wanted. Oh, this one as well. You can go to this one as well. I really like this one because you basically toggle a few things to get your responses. So what are you looking for? There is funding opportunities through the government. There is interest-free loans sometimes or capital investments. There's also tax credits and there's also grant opportunities as well. So we'll click all support here just to try it out. Your main goal is, I'm going to pretend because I do have a client. We'll do start or buy a business. Okay. We're gonna be in Ontario, and then I'm trying to think of a client that I might be looking for right now. Here, let's do it this way. More specifically, let's say we're in education. So you put in the number of employees you have, how much annual revenue you are making, what you are. We'll say we're not incorporated, because then it'll filter all the stuff that's not applicable. Any of the grants that I've seen as of recent usually are applicable just to a corporation. It's not that it's discriminatory. There's certain protocols that needs to be made. We'll say we're for profit. And then we'll do that. And then finally show me all programs accepting and not accepting. And if you click on see your results, it will summarize everything for you in this page. So for funding opportunities, that's just applicable to my business and my industry is in this green box for just funding opportunities, loan and capital investments. These are the programs applicable just to my industry, and you click on more. You also have the opportunity of subject matter experts that you can align with to facilitate this. And it gives you some ideas too of that. And if there's any grants opportunities that are there or collaboration for partnerships. So play around with it a few times, toggle these different things. Now, when it comes to these grant opportunities, there's a certain level of business plan the SLBDC will expect. There's a certain level of business plan the commercial banks will expect. And they usually are in for the big fish, not really the little fish like we are. So the big organizations that are looking for more funding requirements. For grant opportunities with the government, they are very particular at making sure that you check all the boxes off on their grant opportunities. So there's a high level, high detailed level business plan that will be required usually for grants. So as clients are coming across my desk, what I'd like to say to them is, when I'm going through your business plan and I'm making the comments of the holes that it's missing, I want to be able to say to you, hey, there's this grant opportunity available, and I want to be able to turn around and be able to apply to that and not say, hey, we need to go back and revisit this section, and this section because the government needs it. So we will get you at a level that, because sometimes these grant windows are very, very small. So there's a quick turnaround. And just to let you know, we're always keeping an eye for our clients, and we're doing this for you as well. So if anything does come across our desk, we will reach out and say, hey, maybe you should consider applying for this. And there's other opportunities outside of our organization with the Starting Lantern Economic Partnership for funding as well. And outside of the commercial banking opportunities and credit unions as well. I get asked sometimes, will we look at people that have been bankrupt? Again, that's done on a case-by-case basis. It'll depend on how long it was and for what it was, et cetera, et cetera, et cetera. But we try as best as possible to be as supportive for Starting Lantern small businesses as we can. So we do provide financing opportunities as well, not just the business counseling side of things.
Anyways, I'm going to share with your team, with your friends on the line here, something that we give our clients for free because it's very, very helpful. So I just want to show you guys quickly so that if you want to get using it right away, I suggest so you're not doing a me and catching up again at tax time. Seems to be my theme this year. So this is a newsletter you'll get. It just kind of comes with it. So it just kind of tells you some of the stuff that you might be able to use now. This is going to depend on what kind of business you have and where your business is running out of, you know, and if your home office is eligible. Okay. So there are a number of rules for it. So on this form here, or on this newsletter here, you'll find, you know, this is just how to do it. And down here, there's a couple of links that are really good for you to determine whether or not you have home office expenses and can claim a home office. But when you get to the point that you can, especially if you're operating your business before you get your you know, facility that you might be operating out of. This spreadsheet here is a little fancy thing one of my team members made up for me, and it just has some instructions on the front here and then the tracker here. Okay, so it just helps you to keep track of whether it's a utility. Okay, so she made it up, and obviously I'm not following the, here we go. Expense types right here, okay? So you click on this, you're supposed to be able to click on it. Well, this isn't going very well, is it? See more teacher stuff. Anyways.
It's a Mercury retrograde, that's all I'm gonna say.
Jen always says that to me.
If I was close by her, she would slap me.
But yeah, none of my stuff seems to be coming in the drop-down menu. There's actually lots of drop-downs for this, but nonetheless, what you do here is you list out, I'll get this fixed up before it comes out to you guys. I must have opened the wrong version. Not unusual when I'm not in charge of my own stuff anymore. So you list all of your expenses in here. And this is where you're going to track it. And depending on the date paid and depending on what type it is, it links itself over and it creates you some calculations over here for your home office expense. And then you're going to be able to filter by year. You can filter by a month. You can filter by day if you want. You can filter by expense type. And it gives you a whole bunch of information that you can use for yourself. But at income tax time, it's helpful because you can claim these on your income tax, and it's based on the size of your home and then the size of your workstation, meaning your office, and then what your business use percentage is. So this will come in handy if you do have that home office that you use and it's dedicated to the business that you're running. And it helps you to get that extra deduction. And it's typically a little bit better than the one we got during COVID that was the $2 a day or whatever that thing was. This one's a little more detailed and it allows you to keep, as I said in the, got way too many screens open here, but okay, all of these items here could be considered. Okay, so don't forget about what's happening in your own home that has contributed to your business, because you want to make sure that you're taking advantage of that home office expense if it applies to you. So if Jen, is it okay if I just send it to the email or should I send it to you?
That was a question. Could we share this PDF here or via email? That's totally up to you. However, if you wanted to forward it to Ashley tomorrow, then we can get it to the BBB clients.
Yeah, I just want to make sure, I don't know, it has been going on 14 hours for me, so I'm a little useless now, but it was supposed to be a lot prettier and funner than it was there when I was clicking all my drop down menus, but they're all blank. So I'm feeling like I have the wrong version. So rather than put it in here, I'm just going to make sure that I have the right one. Jen, I'll just send it to you and you can send it on to your team. And it's super helpful. We just like to share it with everyone so they have an easy way to track their home office expenses.